There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome, Auvorian campers, traders of the globe. My name is Steve Vetterl, coming to you live 10:30, bit late. Been stuck in meetings here, believe it or not. It's Saturday morning. Today's the 25th of June. Welcome to the Saturday software strategy session. I try to act in a risk manager role for you. And with that being said, I highly suggest over the course of the last couple of months, on the Saturday, in some cases me droning on for an hour, I have gotten a lot of positive feedback in DMs from different subs saying it was great stuff. So I'm going to make this day a bit shorter. It's been a brutal week to say the least, not only here at First Down. We've had a ton of advisors rolling through the office, so trying hard to make it all work. But without any further ado, as I had suspected on Saturday, we had an absolute face ripper of a rally in equities last week, and I had warned that we were very overdone, and that came certainly to fruition. The fact that Fed Governor Bullard and some of the inflation numbers that came out, I think gave the marketplace, at least in this country, and all marketplaces for that matter, a reprieve, and the shorts got barbecued. So it's almost a self-fulfilling prophecy. I'm not going to get into a lot of detail of that here, but you can see that in, I always start trying to with the finviz.com charts. And we set these up for a daily look at charts, and then you can see what's going on globally. I know some of you trade MT4 based equities with some of our fantastic software, either automated or manual entry. Let's go into, you can see we've come off a bunch in the energy space here as well. Not going to get into it. Gold's been flat. The real thing that has me of, let's just say, is the fact that copper is really selling off. And if we walk all the way to a weekly chart, you can see where the economy and prices and copper now, you had just a huge support line here, just blasted through it. None of us trade this, at least I don't think, but I think it's a bit of a tell, quite frankly, that here's where, at least in my particular opinion, the peak demand for copper was. Now we're in a deflationary pricing structure as far as the movements in this chart. And the concern I have now is, have we over inventoried, right? Have we built too many foundries, so to speak, in semi-land? And this is always a critically important sector to analyze from the standpoint of any risk management, right? Because typically this is that canary in the coal mine first. So I think this, along with lumber, along with some of the other commodities, albeit a few, the list is short, they're selling off and they're really leading the pack. Makes me begin to wonder, who knows, maybe Bullard and some of the others came to this conclusion to a larger degree last week, and some of their comments are like, hey, maybe we've been too accommodative to piling up inventories and building excess manufacturing in all sectors, and it's going to be too much, right? So if in fact that's the case, that's what this chart's telling us, at least as far as semiconductors are concerned. Right, so we have another really big area you can see where it broke out from, and just keep an eye on this chart. I'm going to spend the whole day on it, but part of risk management is understanding what's going on in global macro in all areas, and trying to find, have we got any hints? I mean, look where soybeans and oil are. Food costs are really that high. Would canola be falling through the floor, and most of these other commodities be near the bottom, right? So that's why I kept my rant over the last few weeks is like, hey, inflation's out there, but if you extrapolate energy and everything that it is related to, which is a whole bunch of sectors, obviously, I don't see it. I mean, I certainly don't see the inflation in commodity prices, right? I mean, look at sugar, lumber, so forth. In any case, moving into the credit markets, bonds, overdone, talked about it, expect to face ripper rally. We're absolutely getting it. Same thing with, I think the big max pain trade in any of this credit, and it doesn't necessarily have to be just U.S. Treasuries, just what I'm showing on the screen, but, we could take a look at some of the bonds of other countries, right, or any equity markets, and you could see that, a bunch of them are really starting to bounce back. So it's almost like this whole thing was like completely overdone. Maybe we do avoid a recession. I don't know. I still think the jury's out. But in that case, anytime you got rallies and credits, typically you'll have a decline in the dollar, dropped a little bit, as you can see, maybe $1, which seems in the grand scheme of things like a lot, right? But never really seen too many reactions. It's almost like the currency markers that are at some sort of inflection level, or trying to come to a Y in the road, or not sure which way to turn, looking for maybe some additional directions. So I don't really have a lot of insight to provide in this area. Let's take a look at the Forex Factory calendar. Let's move to tomorrow, which is Sunday the 26th. Do remember that at the end of June we start Q3. Okay, and a lot of people are going to be off, at least in the U.S., for the holidays. Let me just pull the calendar up here. Just so you guys know, so here's July 4th. I'm not going to be available next week on, I think it's Saturday. Actually, no, I'll be, hell, I don't remember when the trip is. We're taking a trip to the beach with a bunch of friends and renting a house, but I forget where the hell, when we're taking off. I actually think I'll be able to do the meeting here this time. Next Tuesday is this, next Saturday is the 2nd of July. Yeah, I think I'm good. Disregard it. Alright, so let's filter out the stuff we don't care about. And let's only keep the things that we do care about. Now, this will be important, okay? Anytime Powell speaks, obviously it's important, carries even more weight because of the fact that the Fed has reversed their quantitative easing and turned it into QT, quantitative tightening. Now, I guess the question now is, how much do we do in that area as far as interest rates? It's almost like if Bowler was right and we do avoid a recession, and credit markets are bouncing, which is bonds, essentially prices going back up, yields are going down, which means mortgage rates come down, right? It's all sort of a trickle-down effect into all kinds of industry, minus all the shenanigans going on in energy. But if in fact it does play out and there isn't the inflation everybody thought, or there's a reprieve, if you will, in inflation, or it goes away, then now we have to be concerned about a deflationary period of time. And I can tell you this, markets, they do not like deflationary periods of time. Not the Forex markets, but equities don't, because there's oversupply, and what happens is, I explain, the children in the circle concept all the time. You have, all the children are putting their apples up for sale in the center of a circle of kids, and that's not good for price. The price goes down, right? nobody has an apple, and they're all hoarding apples in their lap, right? None of them are going up for sale. I'm beginning to think this probably isn't the best analogy, but I think it's simple enough you can understand supply and demand from it, because that's always the thing I'm trying to explain to my kids first and foremost. Everything else you learn off of that, macroeconomics, is just a factor of supply and demand, right? Imports, exports, the movements in currency or money supply, whether you're breaking that all the way down from an M1 money supply all the way down to like an M3, just adding different components into the money. So, lots of speaking by lots of central bankers. So my suggestion is, keep in mind, actually I think these guys are all, yeah, this is the forum on central banking, right? Let me just double check. Yeah, it's interesting that this is in Portugal. So it looks like they got all these dogs talking from central banks. If you're not familiar with what the BOE is, the Bank of England, ECB is the European Central Bank, and then obviously the Federal Reserve. I would just be leery of that on Wednesday. You know, this could be like an all-day deal, but it is a banking holiday on Wednesday. Nothing going on Monday here. Consumer confidence doesn't really matter. ISM manufacturing, none of this is really important. All you want to pay attention to news-wise is what's going on at 9:30 a.m.-ish Eastern time. So always check your times on this in comparative to that. Let's take a look at the charts. I'm not going to get too far in equities. I do want to take a quick peek at the dollar here. Give you a grander perspective. Alright, dollar, we're on the daily chart. We are flagging. If you don't know what a flag is, you can draw a line and connect it here. Connect it. Doesn't necessarily mean we break and rip higher, although oftentimes that is the direction. Okay, so that means that we certainly could run back up and hit 106. If in fact you're trading any of the majors in any system or software, note that we are flagging and it could rip us back up. Not flagging here, but we certainly could drop back down to these low area, which we probably should have a support line showing up on the chart. I don't really see that, but just be aware, one spot 03 to 50-ish area, that's the low. A lot of indecision candles in terms of pound-dollar relationship. Daily charts again. So let's always move to GBP CAD after that, right? So in this particular case, a little bit of weakness in pound relation to Canadian dollar, no surprise. If we look over the course of a weekly chart, you can see we broke a very important level here at that 1.6730-ish area, actually all the way down to this 6.1 area, or I should say 6.614 area as well. So this whole zone will serve as resistance should we rip back up there, which I don't expect us to do. I would expect us to spend some time just building a base down in this area, just like we would for the DXY. Back to the daily chart. Even though we're flagging, that doesn't necessarily mean we're going to break. We've got a lot of doji candles in here and some just basic indecision. And I think honestly, you know, some heads were turned this week and thinking, hey, maybe it is an Armageddon in the markets, and I wouldn't be surprised to continue to see an absolute face-ripping rally in equities on Monday. You know, barring any weird comments from the, let's just say, the motley crew that is forming in Portugal of central bankers, I would say we just continue to rally because we're oversold in equities. I should say indices that are equity based. Here's gold, nothing going on. Don't have much to tell you. Seems like we just got more work to do sideways. Another canary in the coal mine, in my opinion. Gold hasn't ripped, right? Things are falling apart. Gold should be ripping. It's not. I think this is just a huge move in the energy space down. Again, we're on daily charts, but looks like to me the magnetization, if you will, is going to be into this 94 zone as far as testing out any big support in oil futures, which is what the CL1 is. This is the traded futures contract on oil. And what else? The other thing of note, you got to look on long-term charts to put this one into more perspective. Again, if things were Armageddon falling apart, why has the VIX really not been that bad? Doesn't mean they can't, right? But put it in perspective of monthly charts, right? This is pandemic right here, right? These are Armageddon levels in volatility. We're not seeing it right now. That's why my theme today should be, remember those old Arsenio Hall shows where he'd be like, things that make you go, All right, let's take a look at crypto. Just those think it's headed down to this area. I'll highlight this on with the dotted line. Still think we're headed here. This is the last bastion, by the way, of the whales, or whatever you call these people. In my opinion, this is the last bastion of support. They're trying hard to push it up. Keep in mind, I think some of this can be attributed to the rise in equities, right? But again, we're looking at weekly charts on this candle last week. It was fairly doji-ish with an indecision candle that formed. Actually, I take that back. So, here, let me just... Yeah, so just looking at the daily chart, yeah, the primary three indecision candles here. This one was what? 21st of June. And then we had the 24th. So today's not completed yet. Obviously, there's not much trading typically on Saturdays, but it is a globally actively traded market all week long. I don't know. You would want to see, I think, that there's been some big vol come in and push us back up, but it just looks like the buy orders are matching the sell orders for now, and you know, maybe somebody's loading the boat here, but from a price action standpoint, accumulated volume, it doesn't look that way. Looks like everybody's just hanging out waiting for the next shoe to drop. Here's Ethereum weekly chart, very similar. Another piece of crap, Coinbase. Actually take it off the chart. I'm not even following it anymore. Let's see. My favorite equity, NVIDIA. Really just like this thing to fall like the 130 so we can get a great pricing point, but that may not be the bottom. Any case, so that is the broadcast. I wish everybody a great weekend. Have a profitable and hopefully a risk management based view in everything you do. My name is Steve Federal. May the trades be with you.